As of January 1st, 2024, most small businesses have to submit the personal information of all beneficial owners to the Financial Crimes Enforcement Network. Business owners know that they have to file returns and other reports with the IRS, but there are other agencies with reporting requirements too. So adding yet another reporting requirement isn't really that surprising. We're going to look at the Corporate Transparency Act and the lawsuit against the government regarding this requirement, but first we will look at how the act will impact your small business. Although there are some exemptions from the requirement, most small businesses won't qualify for any of the exemptions, but I will talk about the exemptions anyway. So why is the government doing this in the first place? Well, Congress put the act in place to try to put a stop to money laundering, which in turn should help prevent the financing of terrorism. Some critics aren't buying this though, because they say that the U.S. government has already been purchasing personal information about all of us anyway, and this is just a way to get personal information for free. The Financial Crimes Enforcement Network will collect personal information about the beneficial owners of your business. The network says that your information will be non-public and will only be disclosed for legally authorized purposes to other agencies such as federal national security, intelligence, or law enforcement agencies, state, local, or tribal law enforcement, foreign law enforcement, financial institutions that need to do customer due diligence, federal and state regulators of financial institutions, and my favorite, the Department of the Treasury, which includes the IRS. As you can see, anything that you report can be shared with other agencies. I'm sure that you have heard of the government taking people down through an IRS audit if they can't catch them any other way. I know when I was an IRS auditor, in order to get a more complete picture of a business and its owners, I would request information from other agencies all the time. So who has to file a beneficial owner's information report? If you form a new corporation, limited liability partnership, limited partnership, LLC, or statutory trust before January 1st, 2025, you will have to file beneficial ownership information within 90 days of forming the company. If you form a company after January 1st, 2025, you will have 30 days to file your report. Existing corporations will have to file their initial report by January 1st, 2025. You will only have to file a report one time for each owner unless any information changes for a beneficial owner. Therefore, if you have an address change or whatever, you will have to file an update within 30 days of the change. When you first file your beneficial ownership information report, you will include the following information for each owner: full legal name, date of birth, home address, and their ID number from an unexpired driver's license, passport, or state, local, or Indian tribe ID. If you don't have any of these, then you can use a non-expired foreign passport. You will have to submit an image of the ID as well. If you're forming a new entity, the person filing the application will have to give all of his or her personal information too. So this means that an attorney or anyone helping to organize your business would have to share their information as well. If your company does not provide the required information, or if you provide fake information, or if you don't provide updated information, you could be fined $500 per day, up to $10,000, plus you might end up spending 2 years in prison. You can shift the burden of keeping an individual business owner's information updated by getting identifiers. With an identifier, a beneficial owner can update their own information. If you have a lot of beneficial owners, it might be a good idea to get identifiers. To get an identifier, a beneficial owner would submit an online application to the Financial Crimes Enforcement Network with all of their required personal information. Once the beneficial owner receives an identifier, your company can just submit each beneficial owner's identifier to the network, and the beneficial owner would be responsible for keeping their own information updated. So who is a beneficial owner? You're a beneficial owner if you 1, exercise substantial control over the company, or 2, you own 25% or more of the company, or 3, you receive substantial economic benefits from the assets of the company. So technically, you can be a non-owner of the company, but still be a beneficial owner. By the way, you can have substantial control even if the control is indirect. For instance, you would have indirect control by being the trustee over a trust, or control by being on the board of directors, or control by having someone else operate a company on your behalf. Some examples of control are A, you are a senior officer. You are an officer even if you don't have the official title of officer, but you perform the functions of an officer. Or B, you have authority over the appointment or removal of any senior officer or a majority of the board of directors, or anything similar to a board of directors. Or C, you have direct influence over important decisions made by the company. Decisions can include things such as any of the following. 1, the sale, lease, mortgage, or other transfer of principal assets. 2, the reorganization, dissolution, or merger of the company. 3, control over major expenditures or investments or issuance of any equity or incurrence of significant debt or approval of the operating budget. 4, you can control the selection or termination of business lines or geographic areas. 5, you have control over compensation and incentive programs for senior officers. 6, you can enter into or terminate major contracts. Or 7, you can make amendments to any substantial governance documents or change significant policies or procedures. Your company will always have to identify at least one beneficial owner. You can file your beneficial ownership reports for free through an online portal. I will include a link to the portal in the description box below. Once you file, your information will be included in the U.S. Beneficial Ownership Information Registry. There are 23 exemptions available to avoid having to file, but most small businesses will not qualify for any of them. Most of the exemption categories include regulated businesses that already disclose beneficial ownership information to other agencies anyway. Please take a look at your screen for a list of the exemptions. The requirements for most of the exemptions are complex, so even if you think that you qualify for an exemption, there might be some requirement that might trip you up. Now, it's possible that you might be able to qualify under the large entity filing exemption, but you would need to have 20 full-time U.S. employees. You would also need a physical operating location in the United States, and your tax or information return from the previous year would have to show more than $5 million in gross receipts or sales in the United States. You would need all 3 of these things to be exempt as a large operating company. In order to meet the gross sales test, if you filed a consolidated federal tax return, you can use the consolidated gross U.S. sales included on your return. However, you can't consolidate your companies to try to meet the employees test. Each company that you operate still would have to employ a minimum of 20 full-time employees. In other words, you can't consolidate all of your companies to meet the 20 full-time employees requirement. Also, please keep in mind that if you are a virtual business, you might not qualify for the large entity exemption because of the physical operating location requirement. For this reason, if you operate a virtual business, you might have to contact the Financial Crimes Enforcement Network to find out if you qualify for the large entity exemption. If you become exempt after you file, you can make another filing with the Financial Crimes Enforcement Network to let them know that your company is now exempt. If you are currently exempt and you lose your exemption, you will have to file a beneficial ownership information report within 30 days after losing your exemption. If you are currently exempt, you don't have to file anything with the network. A lot of business owners are excited about the ruling by a federal court in Alabama that declared that the Corporate Transparency Act is unconstitutional. The National Small Business Association filed a lawsuit in 2022 stating that the Corporate Transparency Act placed an unfair burden on small businesses. Although the ruling permanently bans the government from enforcing the Corporate Transparency Act, the ruling only applies to the National Small Business Association and its members. The Treasury Department issued a statement making it very clear that the National Small Business Association and its members are the only ones exempt from following the requirement. Officials from the Treasury Department were interviewed, and they said that they plan to appeal the decision. So in the meantime, if you are not a member of the National Small Business Association, you will have to continue to file. As it stands now, the new ruling only applies to maybe 0.1% to 0.2% of small business owners. The big question is whether you can join the National Small Business Association now in order to avoid having to file a beneficial owner information report. Who even knows the answer to that question? I can tell you, though, that the Second Amendment Foundation won a lawsuit against the ATF, and the Second Amendment Foundation said that the ruling applies to all of their members no matter when they joined. With that being said, if you want to join the National Small Business Association now in order to avoid filing the requirement, maybe it will work out for you. But you may not have to do that because a lot of people believe that this whole corporate transparency issue will end up in front of the U.S. Supreme Court eventually anyway. Then all of this Corporate Transparency Act stuff will just disappear. If you plan to obey the law, Please be aware that the Financial Crimes Enforcement Network is still issuing updates and guidance about the new act. There are still gray areas and people still have lots of questions. I'm going to include a link in the description box to the pamphlet issued by the network that provides more information. At the end of the day, small business owners don't like the new filing requirement because it's just one more thing that has to be filed and it's an extra headache. Do you believe that the Corporate Transparency Act is something that the United States needs in order to help with the fight against terrorism? Do you believe that it is a threat to national security, not knowing who is behind some of these small businesses? Or do you think that it's not a fight against terrorism, but an attempt by the government to gather more data? Please leave your thoughts in the comments section below. Take care.
9 most terrifying words in the English language are, "I'm from the government and I'm here to help."